Aman Chowhan is joining us, fund manager at Abakkus Asset Management. Aman, hi, good afternoon. Thanks for joining us. So, in some sense, perhaps this was coming, right? Our market just kept moving on or kept moving higher while the global market was collapsing. But you tell us, how do you approach this phase of the market?
Yeah, frankly, the last few months have been challenging for an active money manager because globally the markets were volatile and India had a relatively very strong performance. If you look at the last 6 months data, we would be the only one of the very few markets who are still in the green. So yeah, it has been a difficult market. I feel the positives we all know as to why India outperformed. The local data points are positive. The interest rate is moving up, but it is still gradual. So we are nowhere near the crisis situation where interest rates can hit demand. So government is proactive. So all the positives we know, but at the same time we also know the sentiment impact which market has. If the Dow Jones is down overnight, we open with a gap down. That connect didn't happen in the last month, and so and hence it has been a pretty challenging market to say so. Going ahead in the near term, I feel now on we should be start tracking global markets. Maybe not in a one-to-one correlation, but if global markets continue to be volatile, I feel from these levels, Indian equities can also correct. At the same time, if markets they rally, then yeah, we'll also participate. So that's broadly what I feel. That the last 2 months disconnect should now come back, and we should start going along with global equities.
Going along with global equities, which means catch a leg down then, Aman, right?
Yeah.
Yeah, I mean, so what does one, it's a real question for many who are completely fully invested. It's impossible to time these things, to get out at the right time and get in. I mean, all sounds nice in theory, but it's very, very almost impossible to do. Maybe few do it, very few. So what should one do? Should one do anything or just sit tight and ride this through? Are you making any changes to portfolio? What would you do?
So, as you rightly said, near-term moves nobody can predict. If anybody has a 6 months plus view, then I think we are headed towards positive times because in the next few months, inflation numbers will start to cool off. One, because of base effect and because of the lower commodity prices. So that's going to be good. Demand environment should be strong. We're going to have a good festive season this time around post-COVID. So that's also something which is positive. In the overall, over the next 6 months, I see lots of announcements coming from the government before the upcoming elections comes in. So net, if anybody has a 6 month plus view, then this market, one has to benefit out of this volatility. Any corrections, anything, use the depths to buy and stay positive. In the near term, few months, I don't know, because the biggest worry today globally is not interest rate. It's basically what the demand destruction this interest rate is going to do. Whether you call it stagflation, depression, recession, whatever word you use, ultimately what you're trying to figure out is whether the US is going to have a hard landing or a soft landing. If it is hard landing, then near-term markets will be pretty volatile before Fed again steps in. And if it's soft landing, then I believe in the next 2 to 3 months, dust will settle. Post-Fed, we should start looking at equities again with a normal mid-teen to high-teens kind of return expectations.
All right. Hi, Aman. When markets have been volatile, you have been putting in money and you have been rewarded as well. Now it's getting a little tricky. And since you're saying the globe is going through a bit of a lull, there are two sectors. One is IT and the other one is metals. That's likely to be, see some turbulent times. I'm looking at top holdings. You have HCL Tech, you have Jindal Stainless as well. Both promising stocks on the valuation front, but now they're getting knocked back. Will you look to add on to those positions right now? Or do you think the time has come to sit by, wait, let things settle down, and then allocate? Go ahead.
For the last 2 months, we have not allocated fresh money to both metals as well as IT. We are just holding on to it. We would have trimmed some IT exposure in the month or so. I think we'll wait for a month or 1 or 2 months before we start looking at IT and metals again. For IT, I believe for the large cap, the valuations are now reasonable. One can definitely start looking at mid caps is something which is tricky. The stocks got re-rated all the way to 40, 50 P, which is after correction of the 30, which is still a premium to what Infineon and TCS trade. So if they come near parity or closer to what the large caps are, at that level, I think we'll start looking at mid caps again. For metals, it's basically news flow driven. Every week there is some event, every week there is some news flow. I feel the trigger for metals will come once the Indian government reverses the export decisions that it has taken. And that will happen once inflation starts to cool off. So in the next 2-3 months, once we have a better inflation print and the government reverses its decision, then I feel the investor interest should be back into commodities and metals. And that is the time when this sector will start to look up.
Yeah, the only problem is by then you don't know if the metal cycle will be in a big down cycle or up cycle will be over. But of course, we'll find out in future. But Aman, the other stock that stands out, of course, in your portfolio is SBI, and that's really been the most remarkable stock. Do you think that will remain the leader now for this market in the foreseeable future?
Yeah, we are holding on to it. We are not a big PSU fans. Besides SBI, maybe we have one more stock. Otherwise, we are not even present in the defense space because most of the companies are PSU companies there. So SBI is a standout purely because of valuation reason and the size and the scale the bank has. So Indian economy cannot grow without SBI participating. Taking the valuation of the subsidiaries and stripping that off from the current market cap, then it's still below book bank for size and scale that it has. So it's been a pure value, along with a good management at place. So SBI has been one of the best managed banks. So normally we see only value in PSU. SBI is one where we get a combination of both value as well as a good management team in place. And that's the reason it features in our portfolio. And we are pretty positive on the space. We continue to own it and we'll be holding it for at least coming few quarters at least.
Aman, just to go back to that point, right? You said if someone has a 6-month plus kind of view, then you can look to use the dips to buy. But if you we are sitting on a huge 17-20% outperformance on top of Western markets like the US, which you referred to earlier. So if we are sitting at such a stage, and generally one can kind of get a sense that financial conditions will continue to tighten. There is no sign that things will suddenly pivot, become much easier, etc. Right? So there is downside that's unknowable. How much should one create some cash to be able to buy that dip whenever that happens, or you think that would be unwise? What's your sense?
So it's an individual call as to how much cash you want in the portfolio. In our portfolios, we have cash anywhere between 10 to 15%, and which we intend to deploy in the next 3 months.
All right. What about the domestic-facing themes, Aman? You liked auto ancillaries. There were building products as well. That's something that you have got right in the past. Whether it was something like an Acrisil, HIL, they have done pretty well. Do you continue to remain your positive stance out here? They are the sectors worth betting on from here on as well?
Yeah, we continue to be positive because we are positive on real estate and we don't have a direct real estate exposure, which we indirectly get through by these companies. Then near term, some of these companies for the next 1 or 2 quarters might have a headwind. Somebody is exporting to Europe, somebody is importing some raw material chemicals from China where prices would have gone up. So there is some margin pressure in some of these companies. But if I have to normalize that and look beyond 6 months, once things should stabilize by that time, I think this company still offer a decent value. And that's the reason we continue to remain positive and continue to own them.
Aman, the stock that was the real money spinner for you post-COVID was Route Mobile, right? I think you were pre-IPO investor, and you can correct me if I'm wrong, but you made multiple times returns on your investment. But from its highs, the stock has fallen about 40% or so. Are you still keeping the faith here?
Yeah, we don't comment individually on stocks, but yeah, broadly, we continue to hold on to what we have. If you look at the numbers, first quarter numbers were great. This year, the company will be growing in excess of 50% top line and more than that on the bottom line front. And I expect this momentum to continue. So even 24, it should grow in excess of 20-25%. So for that kind of a growth CAGR and a very clear beneficiary of the global digital trends that's going on, it still makes good sense to have this in the portfolio.
What about sugar? Is it as sweet? I think, a few months ago, not, in the last couple of months, but I think maybe the month of April, maybe had a chat out there, and sugar is looking quite sweet. Is it as sweet right now, or do you think, you'll hold back for the time being?
Sugar is as sweet as far as the sector is concerned. Last few months, stocks have not performed. Main reason one was that the government had that export quota come in, Industry is expecting some relaxation and a new number for the export quota for the next season. Once that comes in, I feel demand should be back into sugar lane. So globally also, sugar seems to be holding on around 18.5 cents. And if that's the scenario, and with talks of further drought in Brazil as well as lower output in Thailand, then I believe internationally sugar prices should do well, and then domestically also all these companies, because of the ethanol profits coming in, will do well. And there is no reason then why the sector shouldn't get re-rated. So that's broadly what our thesis is. Thesis is holding on for now. Last 6 months, stocks have not performed, mainly due to the government issue. Once that is resolved, I think sector should be back.
Okay, all right, Aman, always good hearing your thoughts. Thanks so much for joining in and giving us your views on a whole host of sectors. As you said, sitting on around 10 to around 15% of cash at these levels, and you'll gradually be looking to deploy. Wishing you a good evening and a good weekend ahead as well. By the way, that bit of a bounce that we were seeing on the Nifty, that's got sold into, and we're drifting back towards that 17,300 odd. Remember, we pulled back to around 17,360, and from there, we've again seen some bit of selling. Difficult trading session for the bull.